Hello everyone and welcome back to That Investing channel. It's a little early, but I thought I would do an update on my portfolio, see how it's getting on. There's been quite a lot of changes, so I don't want you guys missing out on anything. I sold out of 3 positions and I'll be explaining why. I bought one as well and I wonder what that could be. And I'll be showing how it's performing so far. And finally, my plan for this portfolio in the future. With both my ISA and my taxable trading 212 accounts, it's all getting rather messy and I would like to sort this at some point. If you end up liking this video and want to see other content I'll be bringing to you guys, then feel free to subscribe for future videos. Now kicking it off. If you're new to this channel, I invest mainly in American companies that I believe have a great competitive advantage that will give me passive income from dividends that grow each year minus the US dividend tax of 15% and hopefully beats the market eventually. But if I'm honest, I'm not quite there yet because that cursed Nvidia and Meta are beating me. But don't worry, I'll get them eventually. Now it's worth noting that I've only been doing this less than a year and already my gains are a lot higher than nearly all the dividend payers in the UK within that time through capital appreciation. So that's why I stick with mostly American companies for now. I'm currently up 7.77% or around £1,216 in the green. My current portfolio value across both my trading 212 accounts is sitting at £16,874. That's down from highs just last month in February of around £17,000. Nothing's changed, I haven't added any more money. The changes have actually come from new positions I've actually bought into and actually just my stocks going down in general, specifically United Health Group. So what did I buy? The 3 positions I sold out of was Evolution AB, a company in the Netherlands that manages online casino licensing, which I was up over 30% on, but FX robbed me of some of those gains, selling 5.01 shares, making a profit of £138.73. Then we've got Microsoft, which needs no introduction. I just sold 1 share, selling at a share price of $420.47, making a profit of over 20% in the green by £70.57. And finally, S&P Global, selling my just 1 share again at $428.13, coming in at over 13% in the green after FX impact for a plus of £44.24, bringing our total realised gains to £253.54, which is some solid returns over 11 months. Now the reason for selling out of these positions was not problems with the companies themselves. I believe in the thesis that you should only sell a company when you made a mistake with researching them to begin with, something changes in their fundamentals and now you've got to take a look at their position again, or finally, my reason this time round, you see a better opportunity elsewhere. I didn't get worried about these positions, but these were my smallest positions in my taxable account, and I will be selling out of them at some point anyway to shift it over to my ISA account in the future. So what did I buy? No, it wasn't Nvidia before someone asks. It was Adobe, the subscription-based software company that produces image and content editing software along with Adobe Acrobat Reader and the portable document format PDF software. I did a full video on this one, so I won't go into too much detail about my reasons, other than to say it fell to an unjustifiable level in its earnings report last week, and with a massive dip over 13%, I just couldn't afford to pass it up. So I bought 3.1 shares at a share price of $497.99, spending a total of £1,214.32 on the 15th of this month. So how's the stock getting on now? Well, my 3.1 shares are actually up by around 3.99%, well now 4%, so currently sitting up by £48.45 in unrealised gains. My share price of $497 looks pretty good at the moment against the share price that it currently sits at of $516. But on the whole, I wasn't really buying it for a short-term gain. I do believe in this one long-term. If we look at it over a max period, we can see that it's come from those lows all the way back in 2022 and shot up since then, and I think it will do similar in the future. the rest of the stocks I'll actually cover on GetQueen because I think it's a bit easier between the two portfolios. So in overall performance, we've actually got around £16,850 worth currently sitting between both our portfolios. And we're currently in the green by about 7.61% for about the 11-month period that we've been investing. So unrealised gain of about £1,191. There's no particular reason why this fell from its highs other than the fact that I bought into positions and sold positions that had done very well, like Evolution, Microsoft and S&P Global, which were all up over 20%, as well as the largest position, which is one of the ones I'm down the most on. We've got United Health Group. I own £3,126 worth of this stock, so I've got 8 shares, sort of roughly, and it's currently about 18.55% out of both of my portfolios. Currently, we're in the red slightly, and that is around 3.84%. So we're down by about £125. And this one hasn't performed that well for us so far. We actually bought in a period when maybe it wasn't the best time to buy, which is just typical for me. But overall, I do think this is a dip that will actually help us in the future. I don't think it's currently sitting at particularly a bad valuation. I think it's quite a good valuation for such a high company. So I hope the share price will actually recover in the future. Now, moving on to VICI, which is my second largest holding, we can currently see that it makes up around about 14.69% of my current holding, so £2,478 worth. And we're also in the red on this one, so we're noticing a trend here with my biggest positions, unfortunately. With 109 shares, currently sitting around about 6.36% down from around about £168 unrealised loss. Now, my current share price with this one is currently sitting just below £30 or so, I would say, roughly between both accounts. And this year to date, this particular buying point wasn't particularly that good. I've continued to dollar cost average into the stock as it goes down. Until those interest rates recover, I do think that this one's not going to do too well until those interest rates recover. So I'm actually hoping for that at some point, but I'm fine with actually getting those shares back in the meantime. Third up, we've got VISA sitting around £2,308, about 13.69% of the total portfolio. And we can see we're up on this one by about 18.68%. We originally bought in around about 1,944 shares across both our accounts. And we're currently in the green of unrealised gain of about £363.25. Then next up, we've got Texas Roadhouse, our best performer. So we've got £2,234 worth of shares with this one, currently sitting at a weighting of 13.25% across both portfolios. We have 18 shares, just a little over. We bought in around about £1,500 worth, and we're now currently in the green by a considerable amount because we're up 47.53%. So in the green by unrealised gain around £719, which is really nice to see. Looking into my tactical account just a bit closer on this one, I can actually see that it means that I'm a good investor because I bought at such a great starting position. No, it doesn't. I was just very lucky. But it's performed very well as a result. Moving swiftly along, we've got Amazon, which is my fourth largest holding, fifth. I can't remember now where I'm at. But I would actually like this one to be a bit bigger. I currently own £2,202 worth of shares, currently sitting at a weighting across both portfolios of 13% or so. Amazon, we've got around 16 shares. We bought in just below £2,000 worth, and we're currently in the green by 11.88%. So in the green by unrealised gain of around £233. And this one's been on an absolute tear recently, and I really want to get a higher position in this one because I do think that this is the year where Amazon will do particularly well. I think it's sorted out its operating margins, and that's actually starting to reflect in the earnings calls. Their ad revenue will start coming in this year, so I think we're going to see a massive uplift in terms of its free cash flow that it's generating. And I think investors will actually push the share price up as a result. As we can already see, it's done very well already. And I'm currently waiting for a bit more money so I actually can add to this position because unfortunately I don't have any at the moment. Then we've got Apple, which actually hasn't performed that well for me, although I'm sure other people will have done very well. I was late to the party on this one, so it's a bit unfortunate. I've got £1,540 worth, sitting at a weighting around 9% in the portfolios, and we can see we've bought in around about £1,590 worth. We're down by around about £50, so 3.14%. And generally speaking, this one hasn't performed that well for us. So I sold out of my position in Apple around the $185 mark before it went on this massive dip that it's now gone on in my taxable account, because I was actually looking to transfer over any capital I've got in that position and put it into my ISA. Well, unfortunately, I didn't get that far because I bought into Adobe and a few other different companies like Amazon. So now we're currently sitting at just the small 9% weighting. But this one is slowly recovering. In terms of when I bought it, it's one of the only companies I didn't really look at my intrinsic value before buying. And it's actually beating back at me because I am paying my dues without doing my research, I think. So in all honesty, I'm actually going to wait for this one to recover. I don't think that it's that bad of a share price that I bought it in at, around about $181, but I do think that it could have been a lot better. So we'll see how this one goes. I don't know whether I'll keep this position long term. It's just one thing I've been thinking about in terms of revenue growth and stuff like that. I don't think it's going to be growing that strongly, and I'll have to consider whether I'm going to hold it for the long term, which is a bit of a shame because I really like Apple. But yeah, I don't know if this one, I'm having second thoughts and I don't really know why. But Warren Buffett holds it, so I mean, what do I know? And then we've got Adobe sitting at £1,256 worth, 7.46% of the two portfolios, and we can see that it's currently up by about 3.52%, as already covered. Next up, we've got Moody's, currently sitting at £1,048 worth, 6.22% of both the portfolios. We can see that I own about 3.43 shares. I bought in around about just over £1,000, and it's up by a small amount, around about 3.96%, which is fairly nice for this company, as I bought into this one fairly recently, a bit similar time that I bought Amazon. I've been actually wanting to break into the credit rating agency space for a while now. I dipped my toes in with S&P Global before selling out of that position, as I covered earlier. The only reason to sell out of it was because I needed the money in order to actually, I think, make this purchase and purchase some of Adobe as well. So that was my main reasoning. Obviously, as we can see, we actually bought when it dipped loads from its earnings report. There was no real reason for the dip on the earnings report. I think they gave a bit more conservative guidance. I did do a video on it, and I've forgotten why I did it. But in total, I'm keeping up with this company, and generally speaking, there's nothing really wrong with it. They're performing very well. They just give modest guidance, and generally speaking, they're actually performing not as well with the higher interest rates. So I think a bit similar to VICI, this one will actually do better when those interest rates come down. Then finally, my smallest holding, my itty bitty Microsoft. I own two massive shares in this, sitting around about £666 worth, 3.96% of the portfolio. Now, I did own more of this. Obviously, as we covered, I owned 3 shares. I sold one. It was in my taxable account. I was going to have to sell it anyway because I was going to convert stuff over into my ISA. So we're currently sitting at an average share price around $326. My mind tends to work with dollars, so I know that the share price I wanted to buy at was below 330. So that was what I had in my mind. My mind works in silly ways. But we're currently in the green by 29.33%, so up by around unrealised gain of £151, which is very nice. Obviously, it's a small holding for me. I wish it was bigger. I love the company itself. I think it's been on an absolute tear. I do think it's sitting just above its intrinsic value at the moment. People have smashed them up because of this AI craze that I think we're seeing at the moment. That's not to say that I don't think it deserves this premium, but I am concerned because I like to have a bit of a margin of safety because I've been stung in the past a bit like Apple. So that's maybe my reason for selling out of this position in a small way and trimming it a little bit, and hopefully we'll acquire some more in the future, and we'll definitely keep my eye on it. That's about it, guys. That's my portfolio. I really enjoy making these portfolio reviews. Actually makes me feel a little bit better. Obviously, in this particular case, we're trying to get a dividend growth portfolio alongside a few stocks like Adobe and Amazon that don't currently yet pay a dividend, but I anticipate will pay one in the future. So I'm trying to get the best of both worlds with a capital appreciation in good stocks in America, and also enjoying the dividend revenue that I can produce and maybe get a passive income out of in the future, even with that 15% that are being deducted from tax revenues from America to the UK. I'm well aware that some people may think the dividend yield of 1.6% is very low at the moment, but as we can see, my yield on cost is actually a little bit higher, and with that dividend growth rate of over 10%, I'm actually hoping to build a dividend snowball, hence the logo, and produce good returns in the future along with capital gains. So that's my thought process on it, guys. Tell me what you guys think. Do you like my holdings? Do you not like them? Would you prefer UK companies in your portfolios? Just feel free to let me know. As always, guys, best of luck with your investing. Thanks for watching. It's appreciated, and I'll see you in the next one.